Hey everyone, this is Aaron with Thrive Student Loan Advisors. We're back today with another video in our forgiveness series. Today we're going to speak about public service loan forgiveness, um, the big one when it comes to forgiveness programs. So, the Department of Education says anyone who either works for the government, it could be local government, city or county, state government, federal government, even tribal governments, our Native American neighbors. I have a client, or I guess I had a client that worked for a Native casino because it was owned by Native government on Native land. She qualified for public service loan forgiveness and got her loans forgiven completely. Or people that work for a 501c3. A 501c3 is kind of a shorthand. There are other not for profit businesses that qualify, uh, but it's a safe bet to say 501c3s. You qualify for what's called public service loan forgiveness. Essentially, this cuts your repayment period in half. The average repayment period for federal loans is a 20-year repay. The average qualified payment count for student loan forgiveness was 240, now 300 qualified payments before your loans are forgiven. Public service loan forgiveness cuts that in half, actually a little more than half. The Department of Education says you only have to make 120 qualified payments. A qualified payment is a full on time payment while in an income driven repayment plan, while in a qualified position. They'll say you have to work full time, um, but it isn't full time, um, or it isn't what we consider full time by traditional standards. It's at least 30 hours a week on average. And as long as you work for that employer directly, meaning they pay you directly. I'm here in Cleveland, Ohio. One of our bigger employers is Cleveland Clinic. Anyone that works for Cleveland Clinic in a qualified position would qualify as long as they work for them directly and not through an agency. So when they say qualified plans, what do they mean? Any one of the three remaining income driven repayment plans will qualify for public service loan forgiveness. This is the program where 98% of people that actually qualify for it never get it. Usually, not always. The reason is because while they qualify as the borrower, their loans do not. Only direct loans will qualify for public service loan forgiveness on their own. FFEL loans, the Federal Family Education Loan Program, Perkins loans, Parent Plus loans, on their own, none of these loans will qualify for public service loan forgiveness, but they all can be made to qualify. Additionally, both your plan and public service loan forgiveness itself has to be recertified every year. Public service loan forgiveness is more of a re-verification. They don't keep a rolling count of your qualified time, so you have to verify it or certify it every year. The qualified plans, however, technically are only for 12 months at a time. They have to be recertified annually, 10 days before your anniversary date or your recertification date. That's very important. After 10 days, you're no longer in an income driven repayment plan. Your payment reverts back to a standard repayment. And there are some instances where that cannot be counted as a qualified payment. So if you're anyone who thinks you qualify for public service loan forgiveness, but unsure if your loans do not, feel free to schedule a loan review. We'll have the link in the description below. Also, we do weekly and monthly webinars. We'll put that link below as well. If you want a more in-depth explanation of public service loan forgiveness or any forgiveness program for that matter, tune in. Until next time, this is Aaron with Thrive Student Loan Advisors, and I'll see you